So a natural place to start a conversation, Jacques, I think, is about investing, right? You had a long track record of investing. Curious as to like do you have any like large principles that you've learned from like a long and illustrious career in investing, like two, three things that stick out?
Yeah, I mean, it's a great question. The main one, and I fell into that trap many times, is the FOMO. I mean, the fear of missing out. And sometimes you're seeing a deal, you're getting excited, and you want, and you heard that some other VC wants to do it, and then it seems that you forget about your own principle about management, the tech, the upside, the market, and then you want to do the deal. And it's I will say it's a most common mistake that VCs with no experience or less experience will have. And that one, it's very dangerous because, like I said, I mean, you always fear of missing out. You want to do the deal, and sometimes you see the flag, but you put the flag aside, and it's a huge mistake. And that's the first one. The second one is you don't try to go outside your investment thesis. I mean, for example, here at Brightspark, what we do, our focus is late seed, early A, and we try to stay within that focus because we are good at it. We know we are good to recognize patterns. We are good to support the company. When you go outside of your investment thesis or your investment focus, then you can make mistake because growth, when you invest in growth company, it's not the same as an early stage company. And when you invest in early seed company, again, you don't see the proof point, you don't see the KPI, and some investors are better than other to do that. And at Brightspark, we know that, and we prefer to stay within that our investment sweet spot. So I will say that's the main two. That's the two main mistake that I'm seeing, and it's tough to not recognize it and to fall into it.
Yeah, absolutely. I like the second one in particular. I think it reminds me of like that famous Charlie Munger quote, right? Of like staying within your circle of competence. And I imagine, and like I'm like such a novice investor, but I've kind of also fallen prey to that, where it's like you see a deal, you're like, you know nothing about the industry, or you have just this being, comment dire, it's like a French word, being emporté, like you're
Yeah,
taken with the wave. And it's like, yeah, but if you're not good at that, maybe you shouldn't do it.
yeah, and you try to invest in company or tech that you do understand. I mean, for example, I will never do biotech or company who wants to develop a molecule because it's not my cup of tea. A good example of that, for example, is crypto slash blockchain. I mean, yes, I understand that market. I understand the dynamic of that market, but so far we didn't invest. We know we have to invest at some point, but we try to learn before we do the first investment. We try to understand that specific market, and at some point we will do one because we know you have to be in that space. I mean, not doing cryptocurrency, but you know that, and you saw all the announcement about Bitcoin. I mean, Tesla is now, you can buy a Tesla with Bitcoin. You can. There's a basketball team that said to their players, if you want to be paid in Bitcoin, you can do it now. So there's a lot of stuff happening. You can have a loan with Bitcoin. So we know we have to be there, but I don't want to do the first company that I will see, and I want to learn before because we do understand, and that's it's coming with, I guess, with wisdom and experience that we cannot be expert in every vertical. Sometimes you have to be humble. You have to understand that yes, it's you have to recognize that it's a great opportunity, but you cannot be the lead investor. You have to make sure that someone else could be, and then you can learn. And then maybe for your second and third deal, you'll build those reflexes that you'll be able to use. So it's a tough business, but it's easy to, oh, blockchain. I want to do a deal because it's exciting. So
Yeah.
that's why VC business is it's fun, but sometimes I mean if you don't succeed, the pain will be enormous.
Yeah, I love that lesson. I'm going to take it down, right? And we're going to maybe come back to crypto in a bit. I find it's all the rage, but also an interesting space. I'll come back to maybe later. Maybe another question along the same lines of any, are there any surprising lessons? Any things that at your beginning of your career you didn't anticipate that today are really surprising as lessons for as an investor?
It's a good question. I mean, what I didn't anticipate, and don't forget, I started the VC business at the second part of the '90s, so I'm not that old, but I can say that I have some experience. So what I didn't anticipate is how fast that the market changed, at least in Montreal, and I will say in Canada. I mean, think about it. I mean, when I started, and even early 2000, I mean, here in Montreal, you didn't have a lot of private VC firms. The main player were fund like at the time Investissement Québec, what it was called Société Générale de Financement, Fonds Solidarité. Desjardins had their own private investment practice. So and some private VC firm, but maybe one or two. And those firm was mostly focused on local business, on local investment. But I mean, when you go back after when Terralis came, you start to see more private VC firm. I think now people doing investment now do understand that if you want to build a disruptor, you need a lot of money, and the ecosystem in Montreal and Canada changed very rapidly. Now, I mean, again, I'm going back to the early 2000. It was tough for a company to raise a Series B, and often we were obliged to sell the companies too early because if you were not able to attract US VCs, you were basically dead. And the only way to have an exit, it was to exit, and obviously the value was not at the top of the arc. Today, when you do a deal, I mean, seed deal, I mean, you can seed company can raise anything between 1 and 5 million, and now you're seeing Series A in Canada. I mean, and we just saw a deal a couple of days ago, Swift in Toronto, and they raised 21 or 22 million, and it was a company that was founded last year. So you're starting to see that, and then when you go in Series B, you have the big player. You have the Caisse de dépôt, you have Omers, you have Georgian, Via Grow, Fun, White Star. So the point that I want to make is the ecosystem changed very fast, rapidly, and now you can build company with Canadian money, and I like it, quite frankly. And now you're seeing the Lightspeed of this world. You're seeing the App Direct. You're seeing Dialogue that went IPO a couple of weeks ago. So you're starting to see those success story, and we need more and more of those success story to make sure that the ecosystem will grow, and you'll see more investor. You'll see more LPs coming into the VC asset class. You'll see company that are not fund of fund, like the banks, like more traditional company who want to have to access to the tech. And one way to do it for them is to invest in a fund, and they will have access to that tech. And maybe someday they will either be a buyer or they will be a user of that tech. So that pivot came pretty rapidly, I will say, when you started to see the Terralis of this world, and we started to build or to build bigger fund, and I'm quite pleased with that.
Yeah, you raised some great points, right? So there's the emergence of this ecosystem. I still feel there's, we're not quite there yet. I still
Yeah.
feel companies tend to sell quite early still, but we're seeing a lot of examples of the opposite. Some like we're talking about before recording, companies like Lightspeed, for instance. So we're seeing more examples, but I still feel there's a ways to go. What do you think is the biggest gaps left, right? So you mentioned some of the positive trends, so like more capital coming in. What do you think is missing just to accelerate or get to that next level?
I think I think the investment side, I mean, yes, we want more player in the market, and you raise a good point. I mean, think about it in 2010. I mean, when you were raising a fund, it was the usual suspect. Like I said, Terralis, Investissement Québec, Caisse de dépôt. And now, when you raise a fund, now you're starting to see, let's say, more corporation. In Brightspark, we have two LP, it's two banks. And you have that in Ovia, White Star. So you're starting to see corporation going into that space. So it's great. So because of that, you are able to get more intelligence. Now I can talk to, and I'm sure you mentioned that I was at Desjardins before. When I was at Desjardins, one of the things I was doing is every quarter I had coffee with the Desjardins CIO because I want to understand what they were looking at. Because for a small number for you, I mean, the at the time the IT budget at Desjardins was $1 billion a year. So they saw a lot of tech. So when you want to do an investment, you can talk to those guys because they saw a lot. So on the investment side, I think we're starting to see a nice ecosystem. You're starting to see synergy within the players. Obviously you're seeing bigger fund. I mean, you have Innovia. They call themselves full stack. So from early stage to growth, White Star. I mean, bigger and bigger fund. So I think it's fine, and we'll need more player anyway. On the other side, I think on the startup side, we're starting to see that, but we're starting to see a new generation of operator. So we're starting to invest in operator that's the second or the third startup, or you're starting to see it's not a lot. It's not like what you're saying in the Valley or in Boston. People coming from big company that saw something that they were not able to develop within that specific company, and now they want to start their own startup, and so they are basically doing some carve out. You saw that in Ottawa, and when it was the big telecom boom with Nortel, a lot of the project was coming from that. In Toronto, you see that with ex BlackBerry. So you're seeing that coming back to Ottawa, you're starting to see project and ex Shopify guys or girls starting new project. Even in Montreal, I'm seeing some people who were at Lightspeed who cannot grow within Lightspeed because Lightspeed is a more mature company, and now either they're coming into the startup or they are starting their own startup. So we're starting to see more and more founders with market experience and with idea that it's market driven ideas. It's not something that I think it should be a good idea. It's more, I did recognize a specific pain. I think I have a solution, and I want to get funded to do that. So it's a huge difference.
Yeah. Yeah, it's kind of cool because they're coming in with a bit of pre-existing validation, right? They've seen the pain point, they understand the customer need, and they're building upon it, right? So like yeah, I think you mentioned, right? There's the capital side, but then the idea and the entrepreneur, and that's kind of that second one is necessary.
Yeah,
uh,
I can give
we're
you. I'm sorry, but I can give you another example. I mean, think in Montreal here when CGI became big and big. I mean, it's huge today, but at the end of the 90s, early 2000, you saw a lot of ex CGI starting their own IT consulting company, and some company were very successful, some other less. But it's the same thing we start to see here in the tech. I mean, like I said, ex Shopify, and then some ex Upper employee, ex Lightspeed. So we're starting to see that, but you want to see that more and more, obviously.
yeah. How do you see yourself, Jacques, as a VC? Like the role that you play, right? Do you see yourself as a coach? More of like, you're also on the board, right? So you're kind of also my boss. So curious as to how you see yourself, how you help your portfolio.
Um, One of the first thing I'm saying to the company that we are investing is if if one day I'm going into the operation is because something's going very bad and you don't want that. So I'm not I mean, I have operational experience, but when we do an investment, it's not like a buyout fund where you are the majority owner and then you almost the operator. When we do an investment is because we do recognize that the founder is the guy and is the main guy, is the main operator, and we basically doing a bet on these guys. So put that aside. So yes, I'm on the board. So I'm seeing as a growth vector. So and like I said at the beginning, because we have a lot of experience at Brightspark, myself is 25 years. Same thing for Sophie Forêt and same thing for Mark. Is we are able to recognize pattern very fast. And if you are a founder, it's probably the first time you do a financing. It's probably the first time you do a debt financing. It's probably the first time that you have to make sure your IP is well documented. It will be probably the first time that you receive an offer from a potential buyer. I did that M&A, I probably did 25 to the M&As. Same thing for Sophie and Mark. So we can recognize pattern. So that's where we can help a lot of company. The company needs to get validation with a potential customer. I think now at Brightspark we have a big enough network that if I want to call I was talking about the CIO of Desjardins, I can do that. I can do that at RBC. I can do that at BMO. I can do that at a lot of places. And if I'm not able to do it, I'll find somebody who will help me to do it. So we're there to accelerate the growth. So and also we understand that building a company sometimes yes you can invest in the company and 3 years later you can sell it at high valuation, but that's those are the outliers. We understand that to build a successful company it takes time, and we know that you'll have to do some pivot. We know that. So the best example is Hopper. I mean, we are investor in Hopper at least for the last 12 years. And believe me, I was not there at the beginning, but Fred did a lot of pivot before finding his product market fit. And now today we are very happy about it. So we do understand that also. So we can be patient. What I like to say is I'm not in the business of flipping company because I want to raise the next fund as fast as possible. I want if that's your thinking, you'll probably miss some window, and then when it's time to raise the next fund, maybe your portfolio is not performing as you thought because you cannot sell those company because you don't have any company within your portfolio. So we prefer to build company. We know that if you build value, somebody will have a look at your portfolio and somebody will buy out some of your company and will be able to return uh, a lot of money to your LPs. So that it's the line is thin, but I mean it's the approach is very different.
Yeah, I think it comes down to values, right? Like you're not a fly by night. You're looking to build long-term relationships
Yeah.
and long-term partnerships. And in a world of like fast money capitalism, sometimes rare. So applause for that. Going back to what you said before, this concept of pattern recognition, right? So like every company is different, but then sometimes there's things that you see replicate. So curious, what do you see as the biggest challenges for those early stage or Series A companies? That happen to cut across your portfolio, right? So usually it's companies that have, let's say, product market fit, have found a market that are growing. Is it maybe just lack of operational experience, the bench? Is it like? Yeah, curious to pick your brain actually.
I mean, it's a good question. I mean, obviously, sometimes the bench is not strong enough. I mean, at at the seed level, even the Series A level, the best salesperson is the CEO. So when the CEO is the best and probably the only salesperson, it's tough to replicate sales. So the bench is not strong enough. So, but there's a way to offset that. Maybe instead of going after the big logos because you're already thinking and your next fundraising, sometimes you have to go after the low hanging fruits because you as a young company, what you want to show to investor, your actual investor or the potential one is you're able to build traction. And sometimes at the beginning you have to go after the low hanging fruit, even if it's not the big marquee name, but you at least you're showing that you're able to sell your product multiple times. And if you are going after the big elephant, I mean, sometimes that sale could take 6 months and you're not even sure if you'll be able to replicate that. So that's usually one of the big mistakes I'm seeing. Instead of going after, let's say, the mid-tier company, where the sales cycle could be shorter, even the price point will be lower, but at least you're selling your product, and you will learn from that. Because again, even if you're coming from a specific vertical, and you think that you have a good MVP or you think you have found your product market fit. I mean, sometimes it's not perfect, but you cannot learn if you can sell your product. You need customer to give you feedback. So it's a combination of all of that. I mean, replication of sale, the bench, and with time. I mean, when you're able to do that, then obviously you start to hire people, and then you're able, let's say, to clone the CEO. At least you're able to start to build a sales team that will be good. And even with that, you know that maybe 20 after 1 year, you have to let go 25% of that team because it's not good enough. And that's the other mistake. Some some one of my CEO is saying hire fast, fire fast, and sometimes they don't do that. They are waiting, and I know it's tough. I mean, you just hired somebody, and the person after a couple of quarters is not able to perform for whatever the reason. Sometimes it's better to let go,
Yeah,
and
it sounds.
it's even the CEO has to learn that, and could take a couple of cycles to do that. So
Yeah, what it sounds like, what you're looking for the most in an entrepreneur is the ability to learn, right?
yes,
So be able to scale themselves as the company scales, right? It's kind of like the meta skill that is required.
I mean, we were talking about traps at the beginning and pattern recognition. I mean, I can talk about one pattern is, and I saw that I will not say multiple times, but at least a few times. Is somebody a CEO is in fundraising mode, is talking to you, is listening to you, and then when the investment is done, you're not the partner that you're supposed to be, and is not listening to you anymore, and is still acting like it was its own company. And I saw that a few times, and then the planet are not aligned, the shareholder are not aligned. I mean, the investor and the company are not aligned, and it's a recipe for disaster. That's for sure. And yes, we it's one of the Brightspark value. We like to think that we're good with CEO, and we like to think that we're a good partner, but it has to come both ways. I mean, that's a two-way communication. So yes, I can give advice. At the end of the day, it's still the CEO decision, but I hope he will listen to me, and then he will have all the and he will decide the next path going forward. But at least he's listening to me.
I want to maybe turn the lens outward, inward to talk about Brightspark for a bit, and maybe specifically two recent, obviously I call them innovations, but like obviously your investor platform, your real estate fund. Beyond talking about those things specifically, so why this impetus to innovate in terms of how you think about capital allocation with these vehicles? I find it fascinating. I'm just curious as to the rationale, without maybe giving away too much. Like, what were the conversations with you and your partners as to like why should we do this?
I mean, when they started to do that, obviously I was not part of the team, but I'm an early investor, so full disclosure there. So I did believe to that model very early on. The idea was, and again, think about it. I mean, let's talk about the VC asset class first, okay? I mean, I'm sure you saw that or you heard about it. I mean, from friends or family. I mean, you the typical example is the rich uncle talking to his brother and saying, "Hey, my son has a that needs startup. You should invest 50K." Okay, I mean that $50,000 will disappear because basically that company was not that good. Okay, so the idea was there's a lot of money on the sideline who wants to invest in asset class that could bring returns, and now we know, and we see that almost every week. We know that the return are made by the private investor. I mean, look at Uber, look at Airbnb, look at. I mean, the huge return is made by the VCs or the early investor. When the company is public, yes, sometimes you're seeing growth in the stock price, but sometimes it's flat. I mean, Uber is probably a good example. So when you put that together, the idea was at the time, why not give those accredited investors who have money to invest outside the RSP or whatever plan that they have, tax planification that they have, why not give them access to the real VC deal? And the only way you can have access to the real VC deal is being a VC, because you have to go deep sometimes to find the diamond in the rough. And that's the basic idea when they started that. So they started that, and at the beginning, the first investment was made, and the investor relation was done on Excel spreadsheet and stuff like that. But you have to onboard accredited investor. When you do a deal, you have to sign document. They have to send check or to do a wire transfer. So internally, because I would like to believe at Brightspark we are very entrepreneurial, we build that platform to automate all that process. So now when you go to the Brightspark platform called Spark, if you are an accredited investor, you'll go through a QIC process and stuff like that. If you are interested by a deal, I mean, you'll have access to the deal. You have access to a webinar with the CEO. We'll put on a data room if when you sign an NDA, some information about valuation. I mean, an investment memo and stuff like that. So you can go through these. And if you decide to invest, you click "I want to invest," and then you follow the process on up to the closing. So we have decided to automate that process, and it's done within Brightspark Financial, who is an EMD, an exam market dealer, and it's going pretty well. And we're very successful to attract a lot of accredited investors because they know that they cannot have access to those high quality VCD. And it's the same logic with the real estate fund. I mean, it's basically using our own technology and to create a fund for a specific real estate project, and then everything will be fully automated. And again, it's giving access to accredited investor to high quality deal. We want to give access to as much as possible accredited investor because this asset class is still giving a huge return, and that's the idea behind that.
Yeah. Full disclaimer. I'm like, I did sign up to the Spark platform. Really well done. I haven't pulled the trigger on the first investment yet, but I have to say it's really cool, just like the way you guys have built it. So yeah, obviously a fan. And what I also like your explanation, Jacques, of how it gives more real investors access to this asset class, particularly as the really cool, like well-known brands, particularly in tech, are going later, like at a much later stage than they used to, right? So like the old adage of like if you bought Microsoft when it went public, or if you bought Amazon when it went public,
Sure.
you're seeing a lot less of these stories just because of like the availability of capital in later rounds. So like an Airbnb or a DoorDash or like you name it, coming up already is already at like at scale at like tens of billions or 100 billion in
Yeah.
revenue, or sorry, in valuation. So much harder to make that like kind of like home run like that a retail investor could have had access to in the past. So I find that you're able to offer this something that is become almost like it's kind of sucks that it's not available for a retail investor, but now you guys have
Yes.
this.
Yeah, and you're starting to see that in the states, and you're seeing that also in Canada. I mean, and obviously you have other mechanism to do that. I mean, you have a lot of network of angels. I mean, like Ange Quebec, but it's different process. Our own process. It's each time we do a deal, the main fund, Brightspark Canadian Opportunity Fund, will invest, and for that specific deal, we will create a limited partnership, and those accredited investors will invest through those partnership. And for the company, when you look at the cap table, there's a Brightspark Fund, and there's another line called Brightspark SPV, blah 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 LP. So it's two lines that you have to manage. When it's time to sign document, it's the partner assigned to the deal who will sign that. So you don't have to manage 55 signatures, and so it's pretty cool. And quite frankly, we're quite successful. I mean, within I mean, we probably put close to $80 million of cash coming from those people into that market. People that have money, but they cannot have access to that market, and now they are investor in tech company through a limited partnership. So I think it's pretty cool.
That's incredible. I didn't know that scale, so that's really cool. I want to come back to what we were talking about before, crypto for a second. Not to talk about crypto specifically, but talk about what you're excited about or interested about, like any industries that you're just intellectually curious. So we want to pick your brain on what you see exciting around the corner.
Yeah, I mean on crypto, I mean obviously you'll start to see obviously Bitcoin seems to be more and more in use, and more people will start to use it as a way to do transaction. I mean, it's more decentralized than ever. I mean, it was the whole idea since the beginning. But now you're saying that, and now you, like I said at the beginning, I mean, you're starting to see more and more corporation accepting Bitcoin as a way to pay. So in Brightspark, we cannot invest and create Bitcoin and mining, some mining. We cannot do that. But all the businesses like a fintech, if you do loan and if you want to invest in Bitcoin and stuff like that, those all those fintech business around that, that's for sure we'll have a look at it. Blockchain, same thing. I mean, the famous ledger, the contracts, the security. I mean, there's a lot of stuff will come with that. So obviously, we'll look at some model around that. Um, One of the things that you are looking at, it's everything around the data. I mean, with the pandemic, I mean, before the pandemic, obviously data was growing at least 2x a year, and it's probably more than that now. And with the pandemic, with the work from home, now I mean that data is pretty much distributed. It's either on your computer at home, on server at the office, on server on AWS, on Dropbox, on Box. And the issue with that is that data. What's Am I compliant if I'm looking at GDPR and CCPA, those rules now? Most of the small businesses don't know. Is that data a liability or an asset? They don't know. So we are looking at tool that will help company to manage that data. First of all, to find it, because some company doesn't know where that data here is. And then you want to find it, you want to tag it, you want to catalog it, and you want to make sure that it's at the right place. Obvious example, if you have 100 passport in an unsecured server, I'm pretty sure that it's a financial risk. So we are looking at that because it's a problem. It's a huge problem, and data management will be for that. I will call it data compliance, data risk, data governance. It's something that we are looking at very seriously because we think it's already an issue, and the pandemic has accelerated that problem, and obviously the growth of the data. So if you and the pain will be is bigger now. So it's an area that we're looking at. I mean, at Brightspark, like as you know, we are not like we only do fintech, we only do AI, so we're pretty much agnostic. So we are looking at a lot of stuff. I mean, we can do B2B to a marketplace. One of the deals that we just made is air quality. Same thing as I mean, with work from home now uh, what I'm is my hair here at home is clean, is it high quality. At the office, same thing. So everybody has an HVAC at home. I'm sure if I ask you the question, you don't remember last time you changed your filter. Okay, that's what I thought. So we just invested in a company who has a sensor, laser sensor, to make sure that the air quality is well monitored. You can read the air, and it's growing in the residential market and the commercial market. I mean, people will come back at the office, and now air quality is a focus point of the C-level executive. And you're starting to see company that putting in their lease, they want to have a minimum air quality like in telco 5 nines. So you need tools. It's not the HVAC system, the big HVAC system that you see in the huge building in Montreal. I mean, it's not like the HVAC in the big building in downtown Montreal. You cannot read data from that, or if you can, it's pretty minimum. So the owner of those building, the tenant, they don't have tools to say, okay, I can certify that the air that it's coming to your office, it's clean. And the problem, it's you, it's not me, because you paint your office, because of the kitchen or whatever. So it's huge problem. You want your employee to feel secure, and with people at some point will come back from the home to the offices, and it will be now an issue, and people will be concerned about it. That's the kind of tech that we like to look at or to invest. It's tech that was growing before the pandemic, and the pandemic now it's accelerate that growth. And it's a long term. It will be still a long term potential. It's not. We don't want to invest into company that was created by the pandemic,
Mhm.
because we don't know when the pandemic will be over. We don't know what will happen to those companies. So we try to invest in company that have identified a pain in in the specific market. The growth was there before, and the growth will be there after. But the pandemic has accelerated that growth or
Yeah.
confirmed that it was a need. So
Like you said, I find like it's there's going to be this line in the sand of like the old world versus the new world, right? Like even when you say oh something happened in 2004, it's like it was a long time ago, but then I think it'll be the same when we say 2018. It'll be like oh that was a long time ago, even though it's not.
yeah, yeah,
I
yeah.
find to be this line in the sand. And I think I forget who was attributed this mention, but it's like we're really entering into the 21st century now. So it's like we're really entering into this new era where now it just makes sense. Like you mentioned, air quality is like such a basic thing, or location tracking in a building. I'm curious if you have any other areas that are maybe less well known today, but that are going to be huge areas in the future that we're just not seeing right now, but are just around the corner.
It's a good question. I mean, the best example I can give you, uh, food security or everything around the food supply chain. We did one investment in an indoor farming called Elevate Farms. They are using AI, and they are using a specific technology where you can grow leafy greens, but with a minimum of human intervention. Traditional indoor farming are using a lot of people. That's why the yield is not as great as it's supposed to be. Innovate Farm is doing it differently. So it's, I will not say it's under the radar, but it was something that we did an investment before, because we always thought that food security was, at the time was not, but the food security will at the time we thought the food security will be an issue, and now we can say it is an issue. And we see that with the vaccine, by the way. The United States has, I don't know how many hundreds of million of vaccine, but they will vaccinated all their citizens before sending the surplus to other countries. And now in Canada, we have decided a long time ago to not support the pharma business, and now we are waiting for other countries to have our own vaccine. So it could happen to food. I mean, California is the garden of the north of the United States, and part of Canada. And if something happened, and the U.S. president is saying no, the food is staying here, so we have to find an alternative. So we thought it was a great idea at the time, and now we can say that we are quite pleased with it. And
Yeah.
it's again, it's not a market ag tech. It's not the market that it was a focus of ours, but I can say that we're quite pleased with that investment.
Yeah. It goes to the concept of the resiliency of supply chains and kind of anti-globalization that we're realizing like we went too much towards efficiency. So like having a little bit of friction in the markets maybe not a bad thing, right? So like redundancy of supply chains, local farming that maybe in the past were like seen as an expense, or today maybe more table stakes.
Yeah, and yeah, you're right. So and again, it's for us, it's a little bit off radar, but the market is so huge, and it's not a market like, you don't have a Google in that market. You don't have one competitor who owns 94% of that whole market. You can have big players, but the market is so big that you can still have a success with the one company. And again, even the local market, the Canadian local market, is big enough to have a successful company in it. And that's specific
Jacques,
case.
it's been a fascinating conversation. I could probably keep you for another hour, but I want to respect your time. This has been great. I think you provided some really great insights as to what it means to be an investor, some of the cool areas that are coming. So I have a bunch of reading to do based on our conversation. I guess a final question is just if people want to connect, learn more about the work that you guys are doing at Brightspark, what's the best way?
I mean, people can go to our website, so it's brightspark.com. So just make sure Brightspark, it's BRIGHTSPARK.com. And you'll see our portfolio, you'll see the team, you'll see about the financial services, the real estate fund, the VC initiative. You'll have all the information on our own website, so brightspark.com. And so that's, I guess that's the best place to start. And from that, if you need to talk to me or to my partners, I mean, you can communicate directly through the website. So, and we'll make sure that you'll have an answer from us.
Very cool. Very cool. Jacques, thank you so much for your time.
It's my pleasure. Thank you.